Hi, everyone. This is Will again, just providing some more update on me using velocity banking, but also using a larger line of credit, which is a home equity line of credit to reduce my overall debt. So initially what I'm doing is I'm picking up my W-2 from my employer monthly, $3,390. That's after taxes monthly, about 1,600 every 2 weeks. In addition to that, I'm bringing in about $2,000 in investment and other business income. From there, I'm putting all of the resources into multiple bank accounts, but eventually moving them over to my home equity line of credit, which I have with an online lender. And that line of credit stands at 50,500. That's what initially it started off, 50,500. So last month, I really started working, well, last month and in July, really started working with the checks. So for the month of July, I wrote a total of 4 HELOCs checks directly out of the HELOC for any number of things. Either were the mortgages, student loan, some utilities, in-state and out-of-state, and rent an apartment. What I'm trying to do is also reduce the fees that I've been paying online to do some of these processes. Some charge $3, some charge $2.25, some charge $1. But I'm using the checks and I'm mailing them and I'm looking at the fees that I can save. I stopped by the post office in coming home from work, so there's really no additional charge for the gas, just a matter of getting the envelopes and the stamps. So for July, I wrote a total of 4 checks from the HELOC totaling $2,019. In August, I wrote a total of 10 checks totaling $3,478. This month I may write less checks because some of the checks were mistakes. Like I left off $5 from one bill, so I had to write out another check for that. Another bill had to write off an additional amount. So I think I may drop down to 2 less this month, but in total, it still should be about $3,500 that's coming from the HELOC. In addition to the HELOC, because I'm trying to keep the balance as low as I can without putting any additional expenses, I have a credit card that I pay all my daily, monthly, and weekly expenses in. After the HELOC statement closes, then I write a check for the credit card to zero that balance out monthly. So I'm saving myself on interest by not carrying any balances on this particular credit card, but I still have about 3 to 4 credit cards that I have that I'm working down. So in general, just to recap, I am placing all of my income into a home equity line of credit, and then I'm writing checks from that home equity line of credit for the various bills and expenses. And I've paired that with a credit card that I pay off the following few weeks after this HELOC closes. I'm gonna talk a little bit about a credit, but the credit score, but I'm gonna save that for later. Because this balance occurs maybe like at the end of the month, they report on the 30th or the 29th of every month the balance of the HELOC. So I'm trying to figure out how to pay this off earlier so that the HELOC is reported to the credit bureaus as low as I can. An additional thing that I found out when I compared Experian and Equifax, I think Experian has this HELOC as a line of credit, listing it with the credit cards. Equifax, I think, has it as a mortgage. So it's showing 3 mortgages and does not include this, whereas Equifax is showing 2 mortgages and is not including the HELOC. So that's having a differential effect on my credit score. All of this represents what's called to me velocity banking. Velocity banking. And velocity banking has, for me, since I started in January of 2024, has been to not have as much or nothing in a checking account and having it sit on a line of credit. The line of credit that I started velocity banking with in January was the credit card. I improved my credit. I improved the credit score, the profile of me, and I was able to secure 50,500 in a HELOC on one of my properties. And that's fundamentally how I'm operating. Some velocity banking advocates or individuals call the HELOC that I'm using all my bills out. They sometimes say it's like a credit card or a checking account. They call it a main operating or expense account. So right now, the HELOC is operating as my main expense or operating account, and I'm substituting that with a credit card for everything else. Then I pull out whatever is needed to pay off this credit card monthly, to pay it off by at least the 15th of every month. Okay, so the 15th of every month, I'm trying to pay off or make sure that credit card is down to zero. All right, so again, I'm a political economist. I sometimes run personal finance experiments. I work with clients to reduce their debt. If you're interested in any of the services or how I can help you, me and my team, I'll be more than happy to work with you. You can reach me by telephone or you can reach me by email pretty much anytime. I'll take the call or just leave me a message or just text me that you would like to talk and just see how I'm doing this or how I can work with you. All right. Well, thank you very much for stopping by. Have a great day.